Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Wednesday, August 31st, 2022. The Bears finished the month strong, and the Bulls just can't get anything going. Ever since the Fed has really backed out of this market, it's showing its real hand, meaning that people were just really trading the Fed and they're stuck right now. And as I've said, I mean, I don't mean to get political with this, but this administration is doing everything possible to just destroy our economy and really just put stress on the middle class and lower class. And a big piece of it, it's very easy for them to fix these gas prices. They could fix it overnight, and it has nothing to do with these strategic reserves that they're letting loose because they have to get filled back up again, and they're really not supposed to be used in this context as far as trying to lower gas prices that only raise because of their policies. So it's a kind of a catch 22 with it, where there's no way inflation could really go down without seeing oil prices go down. And we're seeing some people drive less. That's hitting, but overall, that's going to affect the economy. Now, with these 4 or 5 million new immigrants that are in there, how much are they going to give to them, and what is it going to do to our deficit there? So nobody believes in this administration. I don't even think the hardcore Democrats believe in them. I think they're seeing, firsthand what they can possibly do to the stock market, to 401ks, to IRAs, to just the cost of living, and everybody's giving up on them. And that's one of the reasons why I've said, what scares me is what the Democrats have up their sleeves here, because I think they would have pivoted a long time ago if they didn't, meaning that they wouldn't have been trying to pass this climate change bill, that they changed it to the Inflation Reduction Act, which is the dumbest thing I've ever heard in my life. As I think I put in the morning notes the other day, need to go back to just economics 101 to figure out that when you put more money into the system, like they just did with this, 1.2 trillion or whatever number it is, that's not going to cut inflation. I'm sorry, just because people's say prescription drugs are going to go down a little bit, that's not a way that you're going to really be lowering inflation. Trying to get everybody to drive electric cars, just the dumbest thing I've ever heard, because one, most people can't afford an electric car, and two, we don't have the grid to actually handle anything like that. So they're pushing for this green agenda that it's like mathematically and physically impossible to do. And I don't know why they're going down this road. It's I'm scratching my head. I know that just about every single person I talk to, this is the worst year they've had, even going back into the real estate bubble or the financial crisis. That nobody has gone through this probably in 40 years. So this, it speaks a lot for this administration that they're just ignoring and so off out of touch with what is going on, that it's scary. And I think the market is starting to reflect this, meaning that they don't trust the government, the Fed's out of it, so there's nobody that's really going to hold this market up. And we're going to get to a certain point where it's low enough where we're going to see money coming in from overseas, and that's why I don't believe we're going to have any major crash, but we're going to see volatility really start to pick up. So this is the let me go here because it's easier to show. Not that. Hang on. Okay. So I have this support line that is that's sitting right here. And the reason why I have it there, it's not really any major support. We do have some here. You can see that once we broke it and we came up, it was used as resistance. It was used as resistance here. But what also happens though, this is where we gapped over that resistance. And typically what happens, either they're going to close the gap at 39.25, but often they stop at the top of the gap, and that's at the 39.48 level. So this is the support zone. It originally was here. We got a really good bounce off of that, but that gave way once the Powell came out and said he's going to have to keep raising rates. So the second support zone is right here. And if it gets taken out, I mean, unfortunately, man, we're looking at a move down to the 38.50 and possibly closing this gap down at the 38, 37. But I do believe there's going to be some type of bounce before that. And that's really what I'm looking for, where, say, it does come down to the 3,900 level. This is where I'd be, again, interested in looking, dabbling another third on the long side. And really, my target's only going to be just up in these levels here. So I'm not looking for any home run on this. I do believe that we could see a 150 point rally, but sometimes we do get the beginning of the month, you see the funds, put more money into the system. So there's a chance that tomorrow we make some pot of bottom. I think if we gap down tomorrow, it will actually be a better sign or a better opportunity to try to get long. Because then we have, if we gap down, we have Thursday, Friday, and then it's going to be really slow on Friday, and then Monday we're off, so we'll be going into next week. So I'd be interested in this, and then, like I said, I'm just looking for a trade. The safest way to trade this, wait for the bounce and then short it. That is the safest one. I'm looking to go both ways, so I'm going to be looking at this support right here to layer in. And if it gets lost, then we could be looking down at the 38.60. So these are the areas that I'm looking. I don't believe we're coming down to the 78% retracement. Not on this turn. I think we come up and then maybe come back down, but we'll play that by ear. But really, until the bulls can get above this 40.15, which was the pivot that I put in the morning notes, the bears are going to continue to try to push this market high lower. So if they get above the 40.15, then we should see the reaction trade up to the 40.75, 40.63 level. And then above that, we're looking at a move down to the 41.23. So let's see what plays out. We have bullish divergences on the 15-minute chart. We have bullish divergences on the 60-minute chart. So to me, it's throwing up red flags as far as is to looking short. And I think we are going to get one of those big reflex bounces, and that's what I'm looking for right now. So with that, have a great night, and I will talk to you guys in the morning.